Okay, so today, should we start? Someone has any question, he can like interrupt and ask. Uh, okay. So the aim is to of this is to like spark some interest in stock markets and finance, so that you can make much better decisions, investment decisions. So first we will start by basics of stock market. Then we will go to the base difference between technical fundamental analysis. Then we will look at some tools and things about technical analysis, starting patterns, and then we will see some basics of bits of fundamental analysis. So this is the basic outline. So let us start with what is stock market, right? So basically, in a capitalist system, we have different companies which are limited liability companies. That means that the liability on the owner is limited. Uh, and these are typically private limited companies. So, a private limited company is what company which has a shareholding or ownership only with some people. But when it IPO itself or when it offers its shares to the people or ownership to public in general in exchange for money, then it is called public listed company. Uh, so, a stock market is a place where the stocks of these public listed companies are traded, means they are bought and sold. So, for example, BSE and NSE are the major stock exchanges of India, NSE being the most important one. Both are located in Mumbai, in South Bombay. So, what exactly is shares? So, basically, shares or stocks or equity. So, what's the difference between them, equity and stocks or shares? So, basically, what are stocks? So, basically, let us imagine a company, and company, uh, public listed or private listed company, will have its ownership, different types of owners. So, let us visualize this company as a pizza, and every slice is like the ownership of the company. So stock is like a small slice of a pizza or a small ownership of a company. And stock market is where this small ownership certificates is being traded. So, and these stocks are traded on the stock market after a company IPO itself. IPO means initial public offering, after it offers its shares to the general public in general. So what is a index? So basically, in stock market, what is done? Like for example, NSE or BSE, there are different stocks, and if you want to like gauge the sentiment of the stock market in general, it will be very difficult because there are thousands of stocks listed there. So for that purpose, an index is made. For in the index, the most important stocks are compiled together, and based on the movement of those compiled stocks or those important stocks, a number is calculated, which is the index, and that index we can track every day. It is like sort of similar to a speedometer. Like a speedometer gives a track of how fast we are moving, index give us track of how the market is behaving. So there are different indexes. Some examples are there: Nifty, Sensex. So Nifty basically means top 50 companies of India by market cap. Sensex means top 30 companies of India by market cap in India. Every company here in Nifty and Sensex will not have equal weightage in Nifty. For example, Reliance Industries has the biggest weightage in Nifty, followed by HDFC Bank, because the market cap of Reliance Industries is 20 lakh crore, which is highest of any listed company in India, and HDFC Bank is around 10 lakh crores. So, for example, Reliance will have a weightage of maybe 9-10% in the index, and HDFC Bank will have 6-7% weightage in index. But if you like see, there are 50 companies, so actually each company should have 2% weightage. But actually, these in Indian indexes, the the stocks are actually market cap weighted. So how much weightage in the index the stock has is proportional to the market cap of the company. But in US, it is a little different. But it differs across different indexes also in US. So, example, these are the three different indexes: Nasdaq, Dow, and S&P 500. Nasdaq contains all the major tech companies like Facebook, Amazon, Google, Netflix, uh, etc. And Dow Jones is the traditional, basically industrial companies containing index is the Dow Jones. So traditionally, we used to look at Dow Jones, which was a major index of the US market. Also, there is a very important index called S&P 500, which comprises of top 500 companies listed on the New York Stock Exchange. So actually, the most inclusive index here is S&P 500 in US actually. Okay. So if you want to like trade in the stock market or participate in the stock market, you should have a DMAT account. So what is a DMAT account? DMAT means dematerialized. So basically, earlier the stock exchanges, what they used to do, they used to issue stock certificates, and these were literally physical certificates having the name of the company, and you have to. There's a lot of physical process. If anybody has saw that web series, Harshit Mehta, they must have seen the BSC ring and all those things. But after NSE came into being, the stock exchanges emphasized to digitalize this whole process, and that's why they started dematerializing all the accounts. So now all the accounts are virtual, and they are online. So all the stock market activities happens uh, online. So if you want to like have a demat account, so demat account basically is a account through which you can buy and sell stocks. So for example, the your bank account holds money, your demat accounts hold stocks, and the demat account is maintained by a broker. So you cannot directly like go to NSE website and buy stocks or trade on in the stock market or go to BSE website. You have to go through brokers which are listed with the stock exchanges, NSE, BSE, and there are also different players like uh, CDSL and all, which maintains the whole account, demat account maintaining process. You know. So So that's all what Demat account is. So through Demat account, you can buy, sell stocks, you can buy mutual funds, you can buy bonds. So different asset classes even you can invest in. It is not restricted to equity. So one thing I forgot to tell about equity. Equity basically is the stock is the asset class in which stocks are there. So equity is a much more broader concept, and stocks is a much more limited concept. And asset classes means different types of assets. Like bonds are one assets, equity is one asset, real estate is one asset, gold is one asset. Asset is something which has value, which has cash flows in the future. Okay. So, what is trading? You must have heard about this term trading being called. Trading just means buying or selling or stocks. That's called trading. So, we start with some basic terminologies like we understood like what a stock is. Stock is fractional ownership of a company. Shares are individual units of stocks. So, earlier there used to be certificates of shares, but now these are virtual. Although these terms are used interchangeably. Then there's something called as market phases, and there are two types of markets. One is a bear market, one is a bull market. So bear market is one in which the prices of asset drops. So this concept is not restricted to just equity or stocks. It is a much more broader concept. Whenever the prices of a commodity or asset drops in continuously, it is called a bear market. When the prices surge, it's a bull market. So, to represent all this data, what are the different prices and all. So there are some representations. The very important one is candlestick. So candlestick representations, for example, if you want to represent a graph, you can do maybe a line chart, you can do a bar chart, you can. Uh, so a candlestick is similar to that. So in a candlestick, you have different candles. We will see about this. For example, this is a candlestick chart. If you see, so in this chart, if you can see, basically these individual things, these are called candles, basically. Uh, so, for example, this is a candle, this is another candle. There are different candles, and these are forming different patterns also in the chart. We will discuss about them in detail. So, there are two colored candles. One is a red color candle, one is a green color candle. So, a green color candle is a bullish candle. What does it means? That the price in that candle, in that time period which the candle is measuring, the price actually increased. So actually every candle measures a particular time period. For example, let's say this is a daily candles. For example, now each candle represents the price movement happened during one day. So a candle will have basically three parts. We will discuss about it basically. I think in the end, I think it is there. So this is the like how a candle looks like. So there is a body of the candle. So the broad portion of the candle is called the body of the candle, and these are called the wicks of the candle. All these extremities, these are called wicks. So basically, the extremities of the wick of the candle, it basically represent the high and the low of the day, and the extremities of the body of the candle represent the high and the low of, basically not high and the low, the opening and the closing price of the day. So for example, this is a daily candle, then, and it's green color. That means that the price increased in a day. So that means that the closing price, the price at which the stock closed that particular day, it will be higher than the opening price because it's a bullish candle. That's why its color is green. So the closing price is higher than the opening price, and the upper extremity of the wick, which is this point, it is actually representing basically the high of the day, and the lower point is representing the low of the day. For example, let's say some example, some stock, let's say Asian Paints stock, we will get data that hey, Asian Paints stock touch a high of rupees 2500 in this day, and it even touched the low of 2400 in a day. It opened at a price of 2000 440 and true at the price of 2460. So 2440 will be this point, 2460 will be this point, 2400 will be this point. Lower extremity, lower wick, and upper wick extremity is 2500. This reverses itself in the bearish candle. So bearish candle will be colored red, and it means that the price decrease in that day. So basically, the lower part of the body will represent the closing price. The upper part of the body will represent the opening price, because the closing price will be lesser than the opening price because the stocks actually went down. And the basically the upper wick will represent the high of the day as usual, and the lower wick will represent the low of the stock on that particular day. So this is about the candle. So I think this must be now clear that these different candles, if you see here, these are representing one day, and there are different time frames also. The thing I discussed about was about a daily candle. Also, there are candles tracking the movement of 1 minute, even 1 hour, 1 day, 1 week, different time periods you can select in a chart. So this is a daily chart basically. So basically, this, if you see a very big red candle, that is telling that the stock literally crashed this day, right? And these candles successively form patterns which we can decode and etc. So there are various time frames in which a candles are there. For example, it can be 5 minutes, even it can be 1 month. So even a candle can represent a whole month. We discussed about a daily candle, but this concept is generalized. So in a particular time frame, a candle basically represents the price movement for that particular time. So if it's a 15 minutes time period, then the candle will show the opening price, the closing price, the high and the low of that particular 15-minute time period. Green candle represents that the closing price is more than the opening price. A red candle indicates that the closing price is less than the opening price. Obviously, nothing is not any financial advice. So, if you want to like trade out, you want to buy or sell stocks in the stock market, you have to make a demat account with the different stock brokers, and you can only buy sell stocks in the live market. So in India, live market is basically 5 days a week, Monday to Friday. So Saturday, Sunday, for example, today the market is not open, you cannot trade today, and it opens at around 9:15 a.m. in the morning and close at 3:30 p.m. in the afternoon. So it opens for roughly 5-6 hours a day. You can only execute buy or sell orders at this time only. Cannot you buy or sell stocks after this period? You can place an order, but that order will be executed during this time period only, and that type of order is called after market order. We will discuss about it subsequently. And brokers are basically intermediaries between you and the stock market. So there are different stock brokers. Stock exchanges are two in India, NSE and BSE, and stock brokers, or the intermediaries between you and the stock market, are these: Zerodha, Sharekhan, ICICI Direct. You can use any broker. Grow also is very uprising these days. So basically, stockbrokers, they sometimes charge a fee that's called brokerage fees. Some do not charge fees. These are discount brokers. Can everyone open a demat account? So for opening a demat account, you should be a resident of India and you should have 18 years of age and you should have a valid PAN card for you. That's the basic requirement to open a demat account. And you can obviously go to this and check about more things. These are the documents required: PAN card, Aadhaar card, and all these things, bank passbook. You can go to this link actually and see in detail. And if you want to go to Zerodha, which is like the largest stock broker, online stock broker of India, discount broker of India, which is Zerodha. So you can go through this QR link and you will end up at the sign up site of Zerodha. If somebody wants, he can go. He can scan this code. So before trading in the live market, because there are financial implications, you can also do paper trading. So paper trading involves using fake or virtual money. Like for example, that beer bull competition that we organized, that was a paper trade competition. So this that is called paper trading, where you are not using real money. The stock prices in all simulations is real, but the money is not real. So you can practice and learn about things in paper trading. So there's a very good website called as Money by at Money Control. So this is a QR. You can scan this QR. Here you can do this paper trading. Also, the platform that we used for conducting that beer bull competition called Stock Group, that also is there, through which you can do paper trading. So, okay, so this was basics of stock market, what is stocks, how you can make a demat account and stuff. So now we start with the actual hardcore part, which is about analysis. There are many ways of analysis, and we are very like getting out of all the details and just focusing on key things. One is technical, one is fundamental. So fundamental analysis is basically you are like analyzing basically about companies, economies, and all. So you are looking at financial statement of different companies. So obviously, a company which give good results means it has good revenue growth, it has good profit growth, earnings growth, it has good margins. So a stock price will be dictated by that factor, and the other factor is the market sentiment of the market in general, or the greed and fear in the market. So fundamental analysis just look at that proportion of the part, that how the economy is behaving, how the company is behaving, and it's much more a long-term approach for understanding. We do not care about the stock prices in fundamental analysis. We just care about the company, what the company is doing. So every corporate information will be used for doing fundamental analysis. Financial statements will be used for doing fundamental analysis. Economic statements or the things about economy, how economy is behaving, macroeconomy is shaping up, financial things are shaping up. That's part of fundamental analysis. Technical analysis is purely a pattern shaping exercise. So let me give you an example to understand what difference between technical and fundamental analysis is using a story. So for example, you are there in an unknown city, imagine. So you want to basically eat some food in a restaurant. So you want to like figure out which is the best restaurant for eating, and there are like maybe like, let's say hundreds of choices to eat at. So the first approach to find a place to eat will be looking at all the restaurants, like checking their reviews, checking what cuisine they serve, what type of food they serve, etc., etc. You do all that research. That is one sort of approach. The second approach will be you just see on which shop there is more queue or there is more bid. So on the shop where there is much more queue, there is much more crowd, you go. There is a logic behind that why you are doing this, because on the shop on which a lot of crowd is there, most probably that shop prices will be cheap, because if it's very expensive, most people were not going in the first place. Second, it must be serving fresh food, because lots of people are coming, so they have to serve fresh food. And most probably these all these people who are going there, they must have thought something that this might be a good place or this might be a famous place. So this is exactly a distinction between fundamental and technical analysis. Fundamental analysis, you exactly do the first approach. You look at all the information that this restaurant is like this serve this cuisine, these are the menu, this is the prices, these and all these things. And technical analysis, you just saw that what others are behaving, how others are behaving. So how others are behaving will be captured in the stock prices historical pattern, right? Because a stock price pattern or a stock chart will obviously give you everything about different prices at different times and right now. So it kind of gives you the understanding of psychology of market participants, or the psychology or basically the greed and fear which is existing in the market. So I told about two things, that a stock price is determined by two factors. One is the logical factor, that earnings of the company, the revenue and financial factor and these things. The second is the sentiment around the stock. So technical analysis focus much more on the sentiment and the psychology of market participants, while fundamental analysis is much more focused towards understanding finances about the company itself. So basically, fundamental in technical analysis is much more about understanding the past performance, looking at the common patterns that repeat, and predicting the future. And fundamental analysis, you are doing actual bottom up research. So technical analysis is studying stock price graphs, charts. It is a study of basically prices. We do not look at what the company is doing. We do not look at what the balance sheet of the company is, what the profit and loss of the company, accounts, economy. We do not look at any of the factors. We just look at one, two things: price and volume, and the chart. Obviously, chart is representing price and volume. So price is obviously the price of the stock, and the volume is how much it is being traded on particular time frame. So what is the main assumption here of technical analysis is that is basically efficient market hypothesis. So efficient market hypothesis is basically a theory which says that a current stock price is the sum is a function of all the fundamentals, all the news, everything, every sentiment, everything is discounted in today's stock price. So actually, it is like saying this Gujarati saying that Bhav Bhagwan che, or price is God. Price contains everything. Everything is good at a price. Everything is bad at some price. So price is the epic thing, and price has all the information. And because price are because of supply and demand, which is the basic rule of economics. So just studying price history and price trends, we can predict the future. This is the basic emphasis of technical analysis. So history repeats itself, and So this is the difference in fundamental analysis. You do companies analysis, you do industry analysis, you do economic analysis. What is the GDP growth? What is the inflation number? Unemployment? These things, and you do future outlook. What will be the future earnings of the company? While in technical analysis, you are much more focused towards charts, towards prices, towards volumes. So it's technical analysis is historical market data studying price and volume. So there are some major tools which are used by technical analysts. One is candlesticks. Then there are multiple tools actually, but we will cover some basics like candlesticks, support, resistance, indicators, volumes. Also, price action is there, but we will not studying that because it is much more focused towards psychology and it get little elongated. So first thing is market chart. So these are a line chart. So if you search on Google for some stock, like for example, if you search Asian Paint stock price, you will get this kind of a chart, which is a line chart. Then there are bar charts. So one end will represent the low, one end will represent the high of the day, and there will be two these types of lines that will represent the closing and opening price. A better modification, which is much more useful for quick analysis, actually, is a candlestick chart. And this whole concept of candlestick was actually came from Japan. So farmers and traders, merchants of rice in Japan actually started to use this to track and understand the prices and predict demand, supply, etc. of rice prices in Japan. From there, this concept came into existence about candlesticks. So literally, it is like having a candle and there's a wig like in a candle which we have, but the wig is like both side of the candle, and we discuss about it what opening, closing price, and all these things. So this is a, for example, any technical analysis platform. Like for example, this is I took from TradingView, Apple chart, candlestick chart. Apple is obviously a tech company which is listed in Nasdaq. So this is the chart of that. So now we will discuss about different kind of candles which are there. Uh, so first, most important, this is actually a very comprehensive. The concept are much more than this, but we are just discussing the major points. First is the Marubozu candle, and all these candlestick names are actually Japanese names. So these sounds a little difficult to pronounce even to me, but because these are Japanese names basically. So, for example, this Marubozu candle is this candle which has only body and body, and there is no wick or no shadow. Wick and shadow means same thing. So there is only body. So there are two types of Marubozu candles: a bullish Marubozu and a bearish Marubozu. A bullish Marubozu is green color candle, which the closing price is higher than the opening price, and basically the opening price is same as the lowest price of the day, and the closing price is same as the highest price of the day. So this is the strange thing, and obviously you don't see perfect Marubozu candle in the market. There will be some small wick in either side protruding out from here, but that will be understand roughly Marubozu because actually in the real chart, if you see, for example, in the earlier chart, this kind of candle, if you see this green candle forming here, this is a Marubozu candle, but there will be some sort of a wick. It will not be that there is a zero wick. Just get the overall context right. And when we study technical analysis, one important thing is that we study things in context and things in basically uh, chances. Basically, it is more a probabilistic point of view. So nothing in technical analysis is fixed, but technical analysis basically give you uh, the points at which you can cut your loss. That is called stop loss, basically, and your targets. That if this price come, you can book out your profits and all. And nothing which is there in technical analysis is like foolproof. Like anything can go differently from these theories. These are just basic theories, market theories. So a bearish market Marubozu is which the opening price is the highest price of the day and the closing price is the lowest price. Makes sense because the wick is the same as the candle body extremities, right? So what does do they indicate? A bullish Marubozu basically indicate is when it gives basically a certainty in the trend. So for example, in this chart, if you see in the Apple chart, sorry, here Marubozu comes and then there's some certainty in the overall trend. The overall is a uptrend. And we will discuss about this, that what's uptrend, what's a sideways trend, what's a downtrend, all these things we will discuss. But if you see a Marubozu candle comes and then there is uptrend in the market. So basically, it's like a trend confirmation candle, which basically confirms about a trend in the market. And basically, technical analysis, one quote you can remember, you can memorize if you want: trend is your friend. Basically, in technical analysis, you just go by the trend. We do not challenge the market trends, basically. So if you are a pure technical analyst, you will never sell in a bull market and you will never buy in a bear market. When the market is going up, you will never sell, you will always buy. And when the market is going down, when the market is weak, you will never buy, you will always sell. So this is the basic theory. If the market is going up, go up with it. If the market is going down, sell, exit the market. That's the basic theory. And bearish market, so bearish marabozo, basically it gives us the basically bearish marabozo basically gives us certainty in the downtrend. Then there's another one called spinning top. So in the spinning top, it is little opposite. The body is very small, and the wicks are very high. So this is a bearish spinning top candle. This is a bullish spinning top candle. This is one is bearish. This is bullish. So in a bearish, obviously in both the candles, we have a very small body. Upper and lower wicks we will have. The upper wick will be the high point, the lower wick will be the low point, and this will be the opening price of the day. This will be the closing price of the day. So what does it indicates? A bearish spinning top in which the opening price is this one, closing price is this one. It basically gives you that we are at the near of the top of an uptrend. So it is sort of a reversal pattern. So there are two types of candlestick patterns. One is called a reversal pattern, one is called a continuation pattern. And this Marubozu candle is a subset of a continuation pattern, which tells us that the trend is going to continue. And reversal means the trend is going to reverse. For example, if we are in an uptrend market, we will go to a sideways or a downtrend market, or a bullish market or a bearish market. So that is called trend reversal. So a spinning top is basically a trend reversal candle. If a bearish spinning top is formed, so we kind of know that now we are at top of a uptrend, and now there is chances that the downtrend can start. And the opposite also true, that a bullish spinning top, if you get during a downtrend, you can say that with some amount of certainty that this is we are near the bottom of the basically a bear market, and now there is chances of a uptrend starting or a bull market starting. So this is again another candle which is called paper umbrella, in which one wig is almost negligible or very small, and another wig is very big. We have a small body. So there are two types: bullish paper umbrella candle and a bearish. Another name of paper umbrella candle is called a hammer candle, right? And if a hammer candle it appears at the top end of a uptrend, it is called as a hanging man candle, basically. So if you see this type of a hammer candle at the top end of a uptrend, what does it mean? Basically, this basically hammer candle, it dictates, it tells us a kind of a indecision in the market. Because what is happening here, basically the stock prices are determined by the sellers and buyers of the stocks. So here if you see the earlier the stock price opened at this point, the opening price, then the stock must dip at some point of the day, because the lowest point is this, which is the extremity of the wick of this candle, which is very low. So the stock price must have fallen at that point, and the sellers must be very dominant. But suddenly what must have come, that now buyers have put their pressure, and buyer pressure is sustainably enough that they cannot drag the stock prices further down, and they reverse the stock movement, and even they close this candle in a positive, because this is a green candle, it's a bullish candle. They move the stock prices even more than the opening price, in more than the initial price. So that means that there is a lot of buying power also, but there is a lot of tussle between the buyers of the stock and the sellers of the stock. So there is a kind of a indecision happening in the market. It sort of tells us some bits and traces about there could be possibility of a trend reversal. So for example, So now the another kind of candle is an engulfing candle, and we have two types of engulfing candle. One is a bullish engulfing, and another is a bearish engulfing. A bullish engulfing is a large green candle which engulfs the prior red candle. So engulfing candle kind of it's an opposite candle from the last candle, and it kind of is a bigger candle. It kind of engulfs the last candle. For example, if here you see in the bullish engulfing case, this is one candle which is a bearish candle. Now a bigger candle is formed, which is a bullish candle here, not a bearish candle. It's a bullish candle, and it is much bigger than this. So it kind of engulfs both the opening and closing price of the candle. So engulfing candle kind of engulfs both the opening and closing price and even the high and low of the day of the previous candle, and that's why it's called engulfing. It's bullish because it's suggesting that there will be now uptrend happening, and bearish is so both these engulfing patterns and this hammer pattern are sort of signs of trend reversal. These are reversal pattern candles. So if there is a bearish engulfing, that means that earlier there must be a bullish candle, then a bearish candle is formed in which the both the extremities of the candle are much bigger than this. So it kind of engulfs the previous bullish candle, and this pattern is formed. Now there will be downtrend here starting. One of the most important concept here is the concept of support and resistance, and we will see what is the meaning of support and resistance. So for example, actually the prices as we talked about is dictated by the psychology of market participants, and how the buying and selling is happening. If buying pressure is more buyers are there, the stock prices shoots up. If more sellers are there, the stock price like dips or falls, right? So these are key psychological levels. These are some levels at which certain section of the market, either a buyer or sellers, get more dominant, basically. So support is the area at which the stock price, if it is falling, it takes a support and then reverses itself. So if you see in this chart, at this area, the stock price stop falling and then bounces back. Again, it bounces back at this area. So this is a sort of a support level. Support level are not just a single price level, they can be dynamic. Support level can change with times. Support level can be a range of prices, not necessarily be a single price. For example, maybe this price is 420. The 420 might not be the singular price. Maybe it is a band between the stock price takes a support at maybe 410 to 430 at some region in between this region. So it can be a range. It can be dynamic. The support can change itself. Even things happen in the market that the previous resistance become the new support, and we will talk about these things in detail. But this is the basic concept. Support is the region where the stock basically takes support and stop falling further, and there is some sort of reversal happening in the market. Why it is happening here? Because it at this region, in the support region, basically the buyers are much more dominant on the sellers. The buyers dominate the sellers. At this price the sellers start saying that hey, बहुत ज़्यादा प्राइस गुरु जो है गिर चुका है, तो अपन अपना और नहीं बेचते, अपन बेचना बंद कर देते हैं. और बायर्स कहते हैं प्राइस इतना गिर चुका, अब कितना ही गिरेगा और हम खरीद लेते हैं यहाँ पर. तो यहाँ पर बायर्स ज़्यादा आ जाते हैं, सेलर्स कम होते हैं, इसलिए स्टॉक सपोर्ट ले लेते हैं. रेजिस्टेंस इसका उल्टा होता है, जहाँ पर बेसिकली स्टॉक ऊपर जा रहा है, रेजिस्ट करता है अपने आप को, फिर रिवर्सल लेके नीचे आ जाता है, फिर ऊपर जाता है, फिर नीचे आ जाता है. दिस इज द रिवर्सल रीजन, जहाँ से स्टॉक अपने आप को रिवर्स कर लेता है, प्राइस अपने आप को. So यहाँ पर basically what happens is that the sellers are much more dominant on the buyers. So at this region, the buyers feel that the stock, we are getting a very good enough price, we should sell the stock and books our profit at this region. So buyers sell here, and basically sellers also sell and try to short sell the stock. We will discuss what is short selling. Short selling basically means in buying, there are two types of making money in the market. One is you buy a stocks at a lower price and you sell at a higher price. What if you know that the price is going to go down? The market is going to be bearish. So what you can do, you can sell first and buy later. That is called short selling, in which basically the broker gives you a pledge shares, or basically credit of shares, through which you can sell now, and you can give him the delivery of the shares, buy them later, at a later price, obviously. So at this resistance level, the sellers are much more dominant on the buyers. Then there is volume. So volume basically tells us the how many shares are being bought and sold over a given period of time. For example, here if you see there's a table which is suggesting at different times 9:30 a.m. 400 is bought, 400 is sold at this price. So the volume is 400. There is the one confusion. People basically totals the buy and sell quantity. No, basically the stocks that are basically bought, somebody must be selling them, right? So buy sell quantity are similar, right? So the volume will be 400. In this case, it will be 500, then 350, and this you can see the volume. If we there are volume charts also, the VWAP also, this is the indicator which you can use. Somebody may be knowing that, and this is called cumulative volume. So it is like a cumulative frequency that we have. So in which like you add up all the previous preceding volumes also to make cumulative volume. So what does volume actually indicates? Volume actually indicates the interest in the stock. If there is a very high volume, that means that a lot of buying and selling of the stock is happening. So a high volume is what? If today's volume is greater than all the 10 days average volume. If you take an average of 10-day volume, if it's today's volume is higher, you say that it's high volume today. If it's lower, you say it's low volume today. And average is obviously the average. So if there is a higher volume, it suggests some sort of big price movement happening. Maybe it could be in a bullish side, can be a bearish side. If you see that there is a lot of selling happening in the stock and volume is very high and the stock is falling, that can suggest that there is a sustained downtrend that will be there. So, for example, this is a good table. For the if the price is increasing, the volume also increasing. If the expectation is bullish because people are now more and more buying. So earlier, people who haven't bought, we just at that time they are buying today. So the price is increasing. If the volume is decreasing but this price is increasing, that sense that there is a very weak buying and the stock is kind of getting in a weak zone. So it is caution. If the price is decreasing but the volume is increasing, so that means that there's a lot of interest happening. Generally, if this is the case that the price is decreasing and the volume is increasing, it's a bearish sign that uh, the price is dropping because there is much more selling happening, and the volume is also increasing. That means that is again telling us that is much more selling happening, and that's why our expectation is bearish from here. If the price is decreasing but the volume is also decreasing, that means that now less selling is happening. That means that there is weak selling. Then we can interpret that there might be some bullish, but we have to do this with caution. So for example, we if we want to capture something about the momentum of a stock. So what is the momentum? Momentum basically means the rate of change of a stock price. So there are some indicators that talks about how the momentum of the stock is shaping up. The most common indicator used is called the RSI, or the relative strength index. This is the formula of a relative strength index, which takes an input as a relative strength, which is actually a complex this computation. You do average gain divided by average loss over this specified period of time, and you calculate the RSI. RSI gives you a value between 0 and 100 because you are subtracting this fraction from this quantity from 100. So it's 0 to 100. And if 0 means there is very poor momentum, 100 means highest momentum. Obviously, this happens like that. 0, 100, we don't get these values. But so there are zones in the market. One is called as 30 to 70 zone. 30 to 70 zone is a normal zone, which suggesting us there is a moderate kind of momentum. If the stock gets more than 70 RSI, we call it that there is too much momentum and the stock is overbought. So there might be some sort of price reversal happening in the future. If the RSI is less than 30, that means that there is very, very poor momentum in the stock. That suggests that there's a lot of selling happening. That suggests that the stock is oversold actually. So there can be subsequent buying later, and there could be trend reversal. So you through RSI you can kind of get some signals for trend reversal through this. If the RSI is between 30 and 50, that means that the momentum is less. If the 50-70, the momentum is high. So in 50-70, it's a good period where the bullish moves are happening. But if it gets more than 70, then we say that basically it's a overbought territory. So you can see here In if you go to TradingView or any other charting platform, basically most of the brokers apps, if you open Grow app or Zero the app, they use TradingView API to get these charts. So basically, in the indicator section, you can search relative strength index and you can add this chart at the bottom. Like for example, here it is. This is a candlestick, and here it is the RSI. So it is between 0 to 100. So here you can see like the RSI is fallen, then there is a sign of a reversal happening, and then the bullish move started. And here it has got into this point. It has got into over what do you say overbought territory, and now trend reversal can happen, and obviously it happens here that the bullish basically the bullish phase of the market gets over. Another good concept for getting the behavior of the market to get information about the behavior of the market is something called as moving averages. So the concept of moving averages is as follows. For example, if you want to calculate the moving average of, let's suppose, last 10 days. So moving average is calculated for a specified period of time. Let's say in example that I am telling you, let's say you want to calculate it for last 10 days. So what we will do, you will on the first day you will take the prices average of the 10 preceding days prices. Similarly, on the day number two, you will take the average of 9 days before day number one, and one you will take the input as day number one. So, for example, you go to day number 11, and at day number 11, you will take an average of day number 1 to 10. If you taking moving average at day number 20, let's suppose, then you will take an average of stock prices of 9 to 19 day average you will take, and that will be the moving average for day number 20. So moving average is literally that time period is shifting, moving as you are going. There are two types of moving averages. One is called a simple moving average, and one is called exponential moving average. Simple moving average is the weight of all the basically days for calculating the average is one for one, or it's constant, it's a fraction, or it's an integer. For exponential moving average, it is basically some exponent function which is giving much more priority. Basically, the weight is of a particular day for calculating the average is more for the latest day. So, for example, if you are calculating moving average at day number 21, it will give more weightage to day number 20, and exponentially less weightage to day number 19, and even less to day number 18, and so on. So, exponential moving average gives us much more clear indication about the trend of the market basically. So moving averages in general, the theory is that they give us understanding about the trend of the market. So the basic theory is that we use some basic averages if you are doing charting. So there are 20 DMA, 30 DMA. Then there's also weekly EMA, in which we do a weekly moving averages, but that's for much more longer time period. Then there's 30 DMA, there's 50 DMA, there's 100 DMA, and there's 200 DMA. The most commonly used are 200 DMA, 100 DMA, 30 DMA, 50 DMA. So the basic theory is that if the stock price is more than the moving average, any moving average, that means it indicates a bullish signal. A perfectly bullish signal in a market will be sort of like that the more recent moving average will have more price. Like for example, let's suppose today you are calculating a moving average. Okay, so on maybe let's suppose today you're calculating. So suppose you are calculating moving average today. So perfect bullish move in the market will be like the stock price today will be greater than the 10 DMA. 10 DMA DMA here means daily moving average. So DMA stand for daily moving average. If I say WMA, that's for weekly moving average. We usually use daily moving average as compared to weekly moving average because the time period gets much more extended in case of weekly moving averages. So daily moving averages, so the stock price will be greater than the 10 DMA, 10 DMA will be above 30 DMA, 30 will be above 50, 50 will be above 100, 100 will be above 200. That's a perfect like signal of a bullish trend or a buy signal, right? And opposite is also true. If a stock price is below its 200 DMA, we typically classify it as a sell rating according to technical analysis, because the stock momentum is very very weak. So in technical analysis we are trying to capture the momentum or of the stock, basically. Exponential, because exponential moving averages basically give more weight to the recent days as compared to preceding days of the time period we are calculating. So that's why it gives much more better signals compared to simple moving average. So how to use a simple moving average for on any technique, any charting platform you are using? For example, basically stock edge you are using, or trading view you are using. There is option of section of adding indicators, and in indicators you will search moving averages, and then you will sort of search, like, let me show you. Let's suppose we are viewing Nifty chart, right? So here you can add. My internet connection is a little slow. Sorry for that. In the indicator section, you can just search for a moving average. So this is moving average exponential. This is simple moving average. This is weighting moving average that you can custom design for yourself. Uh, so this is a simple moving average of 9 days, 9 DMA basically. So you can see in the chart, generally in a bullish movement, if you see in this region, if you see, the stock price is typically above the 9 DMA line. So if you see this phase, if you see this phase, basically this was a bullish phase in the market. Every time you see, the stock price is mostly above the 9 DMA line, basically 9 DMA. This blue line is basically the exponential moving, sorry, the simple moving average of 9 days. So when you see this type of a market where there is a kind of a bearish market, the moving average is above the stock prices. You can clearly see the moving average is above the stock prices. So in a bearish market, the stock price is less than the moving averages. So a perfectly bearish market will be like that, that the stock price will be less than the uh, 9 DMA will be less than 10 DMA, 10 will be less than 20, 20 DMA will be less than 30 DMA, 30 will be less than 50, 50 will be less than 100. So that would be a perfect bear market to say, right? So we discussed about candlestick patterns, and now discuss about charting patterns. But the first thing in charting pattern basically is phases of market. So there are different phases of market. One is accumulation phase, another is markup phase, another one is distribution phase. So accumulation phase is where basically and one part of understanding phases is this theory: accumulation, markup, distribution. Another theory is stage analysis, in which we do stage 1, stage 2, stage 3, stage 4. Today we are discussing about phase analysis, accumulation, markup, and distribution. So first accumulation phase happens. In the accumulation phase, the retailers are selling and the smart money is grabbing up the asset or the stock, basically in this case. Smart money basically are big investors. These can be mutual funds, these can be really legendary investors like uh, maybe a Deepak Kachoria, or maybe Rakesh Jhunjhunwala, he's no more. Like these type of crazy legendary investors, and these can be even hedge funds also. Which these come under smart money, and dumb money basically retail investors, people like me and you, who doesn't have much understanding of the market. So in accumulation phase, smart money basically buys. The volume is not much. Then there's the markup phase, or the second phase, in which basically the stock rallies up quickly. In this phase, smart money is also buying and the dumb money is also buying, and there's a lot of demand for the stock, and that's why the stock is booming like anything. Like people are like buying this stock like crazy. Like, so इसलिए इस पार्ट में क्या होता है कि प्राइस बढ़ता रहता है, तगड़ी रैली होती है, बेसिकली यहीं पे बुल मार्केट मेजर होता है इन द मार्केट प्लेस. In the distribution phase, what happens that the smart money realizes that this is the time to get out of this stock, and they sells the stock, they dump it, and the dumb money people, retailers basically, they even are buying at this point. So the volume is even higher here because the smart money is selling out and leaving, and after distribution phase there is a bear market happening. So smart money typically buys, accumulates the stock in the accumulation phase when the stock price is less, and then sells it at the distribution phase, in which it distributes, literally distributes the stocks to the retail investors. Basically इस phase में, distribution phase में माल चिपकाया जाता है retailers को. तो रिटेलर्स यहाँ पर गपागप स्टॉक को खरीदते हैं, माल चिपका देते हैं हमारे बड़े बड़े लोग, होशियार लोग, रिटेलर्स को, और रिटेलर्स फिर बाद में परेशान होते हैं, फिर बोलते हैं स्टॉक मार्केट बेकार है, बिकॉज यहाँ पर अब बियर मार्केट स्टार्ट हो जाएगा. So there are many chart patterns, but we will discuss about only two very important chart pattern. One is the cup and handle pattern. Another is the head and shoulder pattern. So cup and handle doesn't mean there is a cup or there is something like that. So basically, in a charting, basically you see a sort of a cup pattern forming from the candlesticks. So basically, it's a U-shaped pattern is formed in a chart, and then there is a little stock price falls for a moment, and that fall is lesser than half of the width of this U-shaped structure. So this hole is more than twice of this length. Then we classify this as a cup and a handle pattern, in which this is a cup, this is a handle. So typically, in a cup and a handle pattern, it's a bullish signal basically. Why it's a bullish signal? Because this here basically what happened is that there was basically the accumulation phase, if you call it in this language, accumulation phase of the stock happening, where the stock was consolidating in a range for a while, the smart money was grabbing it, and now the stock, after the handle, the stock is set for going to basically the markup phase, where the retailers are also going to buy this stock, and there will be a bull rally. So generally, if you very go by technical theory, the basically the target is basically double this length. So the width of the cup, double length is the target. For example, here the width may be 29 minus 22, maybe 7. So the price, so the target will be 14 more than this point. This point, around 29 and 14 more, then 43 will be the target if you go by technical analysis. If you see such for cup and a handle pattern, if this pattern form in the reverse direction, that means that it's a suggesting basically a bear market.
Hi. It's getting a little difficult to follow. Can you use the slides or Jamboard perhaps to explain?
Okay.
Anshuman, probably you can draw it here only on Nifty chart using some free lines, the cup and handle pattern which we're trying to explain.
हाँ, वो ढूंढना पड़ेगा एक्चुअली वो उसमें. अच्छा ठीक है, ओके.
Okay, fine.
वो जैम बनाते वो करते कैसे, यूज़ कैसे करते हैं? Is it from the activities?
Yes, yes. Or if you have MS Paint or something like that in your desktop,
अच्छा,
maybe
ओके,
you
ओके,
can
हाँ,
use
ठीक है,
that.
ठीक है, समझ गया। So if you see, you can see the screen, paint.
Yes, we can see.
So basically, this portion is the cup. So this width, basically, we will see from this to this point, basically, uh, and the target will be double this length. So from the handle portion, the target will be double this. So if this is x, basically this is 2x. Is it clear? So after this cup and handle pattern, there is another pattern called as head and shoulder pattern. So in a head and shoulder pattern, there are two types of head and shoulder: a bullish head and shoulder and a bearish head and shoulder. It has nothing to do with head and shoulder shampoo actually. So basically, a head and shoulder suggests weaken momentum. Basically, if it's a bearish head and shoulder, this is the photo is of a bearish head and shoulder basically. So what happens is basically is that, so for example, कुछ इस तरीके से कुछ बनता है। ये वाला जो पोर्शन होता है इसको हम नेकलाइन बोलते हैं। ये जो लाइन दिख रही है, और ये हेड एंड शोल्डर होता है, जहाँ पर ये हेड होता है, ये शोल्डर होते हैं बेसिकली, और ये वीक मोमेंटम सजेस्ट करता है। तो अगर ऐसे मार्केट अगर ऐसे यहाँ से आ रहा है, तो बेसिकली ये ट्रेंड रिवर्सल सजेस्ट करता है कि मार्केट अब ऐसे चला जाएगा। तो बुलिश मार्केट से हम बेरिश मार्केट में आ जाएंगे। सो और अगर इसका उल्टा है, अगर इसके उल्टा पैटर्न बनता है, तो दैट इज अ बुलिश बेसिकली हेड एंड शोल्डर पैटर्न। जहाँ पर उल्टा पैटर्न बनता है तो हम बेरिश मार्केट से बुलिश मार्केट में आ जाते हैं। So this blue line is a neckline here. This is shoulder, left shoulder. This is right shoulder. This is head. Head is generally this length is twice the shoulder length. Basically, if this length is maybe 1, then this length is generally 2. Uh, in ideal scenario. So this is all about technical analysis. The second portion is about fundamental analysis. So fundamental analysis.
Can sorry to disturb. Like, can we ask some questions related to
Yes,
technical?
yes, sure. I
Like,
said, no, you can interrupt me anytime.
so one thing like which I did not understand is like how do so what I understand from trading perspective, if I buy at low and if I sell it at high, it will be like a profit. But how, so for example, the people those who do intraday trading on say regular basis, so how do they make profit if they do the selling? So
Selling
if
your
I,
thing.
so for example, if the market is bearish, so I would know that the trend would be something like market will start from high and it will go to the down by say by the week or by say bi-weekly or something. But intraday happens on a day basis, right? So probably if I start at the 9 a.m. in the morning, probably I expect the market to go down by 3 p.m., right? So if I buy something, say at 100 rupees, and by the time goes by, say 5 hours or something, and the price drops to say 70 rupees. Now if I sell it, then I'll be in the loss, right? Then how did I
Okay,
make the money
okay,
then?
when you do trading, so there are two types of basically people participant in the stock market. Maybe three. Let's talk about three. The first part is traders. The second part is investors, and the third part is they don't know what they are doing. People like us, right? So the traders, they strictly follow something called as their trading setup, and trading setup basically is fancy language, but basically sort of all the rules that they're gonna follow. So they've said something that if I see this type of pattern, if I see this type of momentum, if I see this type of indicator, something happening like VWAP has gone positive or there's RSI above this and this sort of rules that they've made, that I will buy at this point. And they have strict rules that this is my target, this is my going to be a stop loss. Stop loss is that point at which after that particular loss you will sell and exit from the trade. You will exit the trade, basically. That is the concept of stop loss. So for example, you entered the trade, and you entered with a specified target, you entered with a specified stop loss, and you enter from a trader's perspective. I'm telling about, you have a specified time frame. So there will be two things happening: either your target will get hit in this limited time frame, either your stop loss will get triggered and you will exit the trade and you will book the loss, and in the case of target you get the profit and you book out and you exit the trade. The third case will be happening that the stop price is between the target and the stop loss. In that case you have specified the time frame that I will trade this for this day, so I will cut my all my positions, square off, this is called squaring off all my positions at 3:30 p.m. before the market closes. Example, it is example we are taking this time frame. So that's a trader. The investor is someone who invests. He doesn't trade in the market. He doesn't buy sells regularly. He just bought something usually at a cheaper price and he waits for a long time, maybe 3 4 years, 5 years, and after that, uh, if he gets some better opportunity, he sells, exits that trade, got to the opportunity. If he feels like that this investment is not worthy, then he basically exits that investment in between also. And if he finds that I don't have a good opportunity other than this, so he keeps on holding also. So, for example, people like Warren Buffett and Charlie Munger, they proponent this style of basically in the stock market where you invest for a longer period of time. So, those are investors, and they are third category which do not have any idea what they are doing. So, they have no idea in which time frame they are playing. They have no set of rules. So, for example, an investor will obviously use fundamental analysis. He will never use technical analysis. He might use on complementarily on technical analysis, but his decision will be fundamentally based on fundamental analysis. That he will study about the company, that this company, for example, let's suppose a transformer theme is going up today uh, because of smart city mission. A lot of transformers companies are doing good, so he studies the whole value chain. He identifies this company that makes this sterlings for these transformer companies gonna benefit out of this company is available at 20 times earning, this company is giving revenue growth of 25%, so it's a very good at a good very valuation, the earnings growth is good, the prospects look nice, so he will invest here, wait for 2 3 5 years, book some profit and exit. In other scenario can happen that in between something happens, maybe the management do something stupid, so he might exit his positions then. So this is what happens with the investor. Third category, they don't know what they are doing, they mix all the things, they have no set of rules defined for themselves, so that happens. So am I clear?
Yeah, my question was like more from the perspective of the trader, not from the investing point of view.
So trader.
Because the technical, yeah, so what, how I understand technical analysis is simply like if you look at the past and you try to predict the future. So that's what basically you mean, like you look at the various trends and then you predict whether or not the price will go up or down today, and based on that you enter or exit the stocks, right? So my question was like, if I am only speaking from the perspective of a trader, so one way to make money for a trader is,
So
say,
you were saying that, so
entry point is that
if the stock from 100 goes to 70, he will have a stop loss. Let's suppose his stop loss was
he loses the money, right?
75. Yes, at 75, he will book the loss of 25 rupees. He will exit the trade and exit,
Hmm.
like, so that is the whole
Oh,
concept.
okay. So there is no such thing as short selling. That is in the future an option, right?
Okay, so in US, the instrument works a little differently. If you talk about the Indian market, you can short sell, but you can short sell only in intraday. So you have to cover or square off your positions within today. If you short sell, you have to square off till 3:30 p.m. in the evening. If you want to short
Mhm.
sell for a longer duration of time, so you cannot do it in the cash segment. You only do it in the derivative segment, especially in the future segment. So basically, you sell the futures of the particular stock, and then you can do short selling in that. But many times, most of the stocks are not available in the futures. Only limited amount of only big companies are listed in the derivative section of the market. So obviously, in India, the scope for short selling is actually very less compared to what we get in US, because India is a very developing market. It's not a developed market, so the scope of financial instruments we get here are not very advanced.
Mhm. Okay, thank you.
Any other question? Okay, so this
I
is
had one more question, which was
yes.
related to IPO thing. So, like, I generally hear about a narrative that, for example, Bajaj Housing Finance, they announced their IPO and then it was undersubscribed. Sometimes people say it's oversubscribed. So,
Hmm.
what does that mean?
Basically,
That
in
statement.
a IPO, what is done that basically a company basically sells a part of ownership of it to the public through a IPO. So IPO is an offer to buy the equity of a company. For example, Bajaj Finance here comes. Let's suppose Finance Housing Company comes here. He says that hey, we are a legendary company. We are going to the market, and let's suppose they are raising 5,000 crores money in return for 10% ownership. So they are diluting 10% for 5,000 crore. So that means that their valuation is 50,000 crore. So if the your trend is saying that basically this stock is oversubscribed, let's suppose 5 times, that means that the total amount of like subscriptions or total amount of people who have applied for this IPO, uh, uh, the total amount of these orders total is 25,000 crores. 5,000 multiplied by 5,000 crores. That is the meaning of oversubscription. If it's undersubscribed, let's suppose it is zero point 0.5 subscribe, zero point 0.5 times subscribe. That means that they are raising 5,000 crore in the market, but they just got buying offers of only 2,500 crores from the market. Generally, we see that if there is a lot of oversubscription happening in the market, that means that there's a lot of supply, sorry, there's a lot of demand for the stock, and that's why we say that the stock might do good if it is a lot of oversubscribed. Is it clear?
Uh, f- I actually have like follow up here. I don't understand, for example, if the company wants to dilute its portion, say 10%, they are offering 10% of the company to the public. Let's take your numbers, let's say 5,000 CR.
Hmm.
So my question is, if it is say oversubscribed, let's say it is oversubscribed, say like 1.2 or 1.5 or something. So does that mean they are the people have bought the company more than 10%, or is it like the holding is still the same,
No,
but people
holding
have
will
bought
be
the.
will be decided at the time of when the company is issuing its IPO. So basically, what the company does, it goes to SEBI, and there are different rules for issuing an IPO. So in an IPO,
Mhm.
after they get a regulatory approval for getting an IPO, they issue something called as a DRHP. A DRHP is called draft red herring perspective, draft red herring perspective. So basically, in it has all the information that how many shares the company is diluting, how many shares they are selling, what is the value of the shares, what is about the company. They will give every thing about the company, last 5 years of accounts, everything, who is on the board of directors, who is the CEO, who is managing the company, etc., etc.
Yeah, yeah. So that I understand. So my question is like, for example, if they have decided, okay, I want to dilute 10% of my
So
company.
that
So
only,
if
only so
so,
if in case if it's 5x subscribed, only 20% of the people will get the allotment of the IPO basically. So, for example, if some stock is 100x subscribed, that means that only 1% of people will get the allotment. 99% of people will get refund of their money, will not get any stock allotment. And that process is through a lottery system. So, this is a virtual lottery happening. And on basis of that, basically, SEBI decides that whom to allot the stocks.
So basically, when they IPO the company,
Hmm.
that time if they are diluting 10%, so the 10% will go to people, right? All the 10% will go to some people, whether it's randomly or whatever, whichever
Yes, yes.
means.
It will go
But
to the investors who are investing. People here mean
that
investors. Investors can be retail investor. It can be an institutional investor. It can be a foreign
so
institutional
that
investor.
is my doubt. Like how it is if it is only 10% which is
So
going to the
basically,
people.
SEBI has it rules that this much quota will go for kind of reservation system is there in basically IPO. That out of this, for example, 10% they are diluting. Maybe 3% is for retail investors, 5% is for domestic institutional investors, 2% is for foreign institutional investors. So only 3% of this, for example, it has 1 crore shares. So only 3% or 3 lakh shares will be sold to the retail investors. Also, company
So
have their
that I
own.
still, I think there is some problem with the nomenclature probably which people are using, because what I understand is, for example, imagine that there is no other buyer, only retail is there to which the company is being offered. So if they are selling say 10% of the company, so my question is, if someone says, oh, it's oversubscribed or undersubscribed, that does not mean that they are offering. So this is already decided, right? They have been to SEBI, and then SEBI tells, okay, you go public, and this is the amount of
Huh,
the
that
share,
are already
right?
pre-decided before offering IPO.
Yeah,
That
10% is
how much
also
they will, how
what
much they will basically dilute, at what
it's
valuation they
already
will
decided.
dilute.
Yeah.
Hmm.
Hmm. So how it is that I think this nomenclature is not correct. Probably the subscription, like when someone
Yeah,
says, okay, this
that's
is
the basically the
oversubscribed.
terminology used by merchant banker. So basically, merchant banker and investment bank has this basically do this kind of thing of taking a company IPO. They handle this job basically. So they have devised
Hmm.
this nomenclature.
Hmm. Okay, thank you.
So basically, fundamental analysis here, you do analysis based on what the company is actually doing. Like for example, if let's suppose Asian Paints fundamental analysis you will do, so you will see that these are the business segments. It is selling paints, it is selling putty, it is selling this product, it has this much market share, it is getting this much revenue from this, it is getting this much margins, it has this much profit. The economy is doing this way, so maybe in the next year the margins can improve and the earnings can increase 20%. So according to that, my assessment, the fair value of the company will be this and the stock price is below this, so I should buy this share. So this analysis, whole analysis is called fundamental analysis, where you study about the company, you study about the economy, you study about the accounts, basically. There are two approaches we follow in fundamental analysis. One is called a top down, another is a bottom up analysis. In bottom up, what do? You start with a company, then you see in which industry sector it belongs, then you study the overall economy. Let's suppose I am studying Asian Paints. So one approach could be, I don't directly get to Asian Paints. I will start from the Indian economy and stuff. That is top down analysis. The bottom up analysis will be that hey, I'm studying Asian Paints. Okay, so which industry basically it belongs to? It belongs to paint industry. Paint industry are these players. Birla is also there. JSW is also there. Narrow Leg is also there. These are Burger Paint is also there. This player is doing this good. It is good in technology. It is going in this. So you will do an industry analysis. Then you do a sector level analysis that it is whole in the building material space, which has all the building material listed players. Maybe tiles is also there. Cement is also there. So it is kind of related, a related party related to real estate sector, kind of ancillary for a real estate sector. So you will get to sector which is the building material space. Then you will go to overall economy, that you will see, okay, Indian economy this quarter grew by 5.4%. There's a slowdown in the Indian economy. That's why the building material space is not growing fast enough, because unemployment is higher, inflation is this type of analysis, the bottom up analysis. The opposite is the top down analysis, where you start with the economy. You see the economy is doing this. So if in the economy, if let's suppose in the consumption side of the economy is weak, then you can go and see, okay, so investment side may be strong. So you say, okay, so government is investing a lot of money in smart city mission, and they are so there's tailwinds in the basically transformer space. So you go to the industry level, and then you find a specific company that, hey, this particular company, maybe Kirloskar Oil is doing very great in this space, so I should buy this company. This is called a top down analysis. So this is to approach top down, bottom up. So there are different analysis you do. One is economic analysis, in which you do macroeconomic factors, maybe how inflation is doing, how GDP growth is there, how income growth is there, how basically corporate investment are picking up, or foreign investors are coming in India. Then you do then one way is called industry analysis, in which you analyze various aspects of an industry. For example, you are studying the paints industry, so you will study these players are there, these major five competitors are there: Berger, Nerolac, JSW, Birla Opus, and Asian Paints. You will study about the market share of each player, which player is prominent in which place, because even in paint there is a lot of like sub segmentation, that this is decorative paint segment, this is industrial paint segment, this is home paint, this is putty, and all those that sort of things. So that is industry analysis. Then you do company analysis, in which you study company on qualitative and quantitative factors. So quantitative factors, you do ratio analysis, and we will discuss subsequently about what is ratio analysis. And you do study about qualitative factors about the company, the how the management is the management honest, because there is a lot of corporate frenzy happening in India, in which basically companies manipulate their basically their statement, their financial statements, to get much more stock prices. So is there corporate scandal going on, or there's some accounting issue? You will study about the management, you will study about its past, you will study all the reports and all. And there are qualitative factors about that, what is the earning multiple they are getting, what is the valuation and aspect of these things. So in quantitative aspect, you will study these three things. Quantitative, where you will talk about numbers. One is ratio analysis, which is not here later, but it is also there. Ratio analysis. The second is you do income statement analysis, balance sheet analysis, cash flow statement. Basically, income statement, balance sheet, and cash flow are different, basically financial statements, basically, and there's a difference. I will talk about them. The second is qualitative aspect. In qualitative aspect, basically you discuss about the basically the product. For example, if you're studying about Apple, so you will study, okay, the Apple brand has a lot of goodwill attached with it, a lot of brand recognition, there's a lot of competitive advantage in sort of supply chain it builds, or the product it builds, or the whole ecosystem from the dealer distributor to the company itself. There's a lot of competitive advantage built there. There's a particular business model that Apple will sell subscription model also. It will sell iPhones also. It will sell tablets also, iPads also, and Macs also. So this is all the business model, that how the business approaching that itself. And the fourth part is in qualitative analysis is basically corporate governance, in which you see कि basically management चोर तो नहीं है, बदमाश तो नहीं है management. So these are three parts of quantitative numbers. Basically, when you study balance sheet, P&L, and cash flow. Balance sheet basically tells the position at particular specified time. So I am studying the balance sheet, so it will tell me the financial position of a company at this point of time. Profit and loss, basically, or a income statement. Profit and loss and income statement are both the same things. It basically tells that in a given financial period, for example, in this financial year FY25, what were the basically the income of the company, sorry, the revenue, then what were the costs associated, and finally what is the net profit they are getting, the net profit and loss. The third statement is called the cash flow statement. And why is there need to maintain a cash flow statement is because in the whole world there's something called as accounting standard, and there are hundreds of accounting standards, but most of the accounting standards follow a specific style of accounting called as accrual principle of accounting. There are two principles of accounting, basically: cash principle of accounting, accrual principle of accounting. Cash principle accounting is like, for example, you are basically maintaining a ledger, public ledger of different companies. Let's suppose, take a simple example of yourself. Let's suppose you and your friends are maintaining a ledger, accounts, in which you are mentioning, okay, I have lended my friend maybe Utkarsh this much money. I have lended my friend Gautam maybe this much money, and they have lended me at that time this much money. So when you actually get that money from them, which they owe you, that if you are doing that sort of accounting, that's called a cash accounting, basically. So for example, let's suppose Utkarsh owes me 500 rupees, and let's suppose I owe Dhruv 200 rupees. So net net I somebody else owes me 300 rupees. So in the future he will give me 300 rupees. In the cash statement we will not discuss about this. In the cash we will only see what the cash has come. So for example, I owed Sanjeevi basically 100 rupees and Nitesh 100 rupees. And I paid them them 100 rupees, and basically Ananya basically owes me 200 rupees. So yes, she also paid me 200 rupees. So that is cancelled out. So in a cash system, we will only look at this cash component in which actual transaction is taking place. But in accrual system, which all the accounting standard of the world are today built on, we will see that who owes this much money. So overall, I am in a plus of 300 rupees, profit of 300 rupees in this whole financial ledger. So that is the accrual principle, in which basically the principle is that the revenue is recognized when it is earned बेसिकली. सो जब तुम्हारा ट्रांजैक्शन हो गया, जब बेसिक ट्रांजैक्शन नहीं, बेसिक तुम्हारा जब डील हो गया कि इसने बोला कि ये डील हो गया तो इसका कितना पैसा मिलेगा, इवन वो पैसा आया नहीं है, मे बी पैसा मे बी 6 महीने बाद देगा, लेकिन वो एक्रूवल सिस्टम में अभी हमारे बुक्स ऑफ अकाउंट्स में आ जाता है. इसीलिए जो डिफरेंस आता है वो डिफरेंस आता है प्रॉफिट एंड लॉस बेसिकली, जो कि इनकम स्टेटमेंट होता है और कैश फ्लो में, कैश फ्लो स्टेटमेंट में. क्योंकि कैश फ्लो में हम खाली बात करते हैं कि जो कैश आया और कैश गया, बेसिकली जो पेमेंट आ गई या जो पेमेंट हमने कर दी हमने, उसमें कि ये पेमेंट 1 साल 2 साल बाद आएगा, ये मेरा दोस्त देने वाला है मेरे को, उसकी कोई डिस्कशन होता ही नहीं है कैश फ्लो में. कैश फ्लो में जो अभी जो कैश का जो ट्रांजेक्शन है खाली वही हम देखते हैं. अब कैश फ्लो स्टेटमेंट देखना क्यों जरूरी क्यों होता है? क्योंकि कैश फ्लो स्टेटमेंट तुम्हें बताता है कि बेसिकली तुम्हारी औकात क्या है, बेसिकली सॉरी गलत यूज कर लिया, तो तुम्हारी बेसिकली वो क्या है, फाइनेंशियल स्टैंडिंग किधर है. क्योंकि फॉर एग्जांपल अगर तुम्हें कोई लोन भरना है 100 रुपए का और तुम्हारा कैश फ्लो अभी 20 रुपए है, तो तुम्हें दिक्कत होगी भरने में. इवन दो तुम्हारा प्रॉफिट एंड लॉस में तुम्हें 200 रुपए दिख रहा है, बट वो 200 रुपए 2 साल बाद आएगा, पर तुम्हें लोन अभी भरना है. इसीलिए हम कैश फ्लो भी देखते हैं. So the other part is the ratio analysis. So for example, if you go on screener and you search for any stock, let's suppose Asian Paints. So this side of screen you will get. Let's okay, go to screener only. So तो इस तरीके की स्क्रीन तुम्हें कुछ देखेगी स्क्रीनर पर. सो यहाँ पर स्टार्टिंग में जैसे कि ये प्राइस आ गया कि 2400 रुपये प्राइस चल रहा है, इतना ये चेंज हुआ दिन में. ये मार्केट कैप आ गई कि 2.3 लाख करोड़ की मार्केट कैप है, ये करंट प्राइस है. पी, तो बेसिकली पी होता है प्राइस बाय अर्निंग. सो बेसिकली हम स्टॉक प्राइस जो चल रहा है उसको हम ईपीएस से डिवाइड करते हैं. ईपीएस क्या होता है? बेसिकली अर्निंग पर शेयर. अर्निंग पर शेयर बेसिकली क्या होता है कि जो बेसिकली नेट प्रॉफिट होता है किसी कंपनी का, उसको नंबर ऑफ शेयर से डिवाइड कर देते हैं. फॉर एग्जांपल एशियन पेंट्स के 1 करोड़ शेयर्स हैं और एशियन पेंट्स ने फॉर एग्जांपल 1000 करोड़ का प्रॉफिट कर लिया इस साल में, तो हम क्या करेंगे, 1000 करोड़ को 1 करोड़ से डिवाइड कर देंगे, तो हमको अर्निंग पर शेयर मिल जाएगी 1000 रुपये की. एग्जाम्पल है, मतलब रियल वैल्यूज नहीं है कुछ भी. सो प्राइस अर्निंग में हम प्राइस डिवाइड बाई ईपीएस करते हैं. तो फॉर एग्जांपल अगर प्राइस 2400 चल रहा है और 1000 रुपये का इसका ईपीएस है, तो 2400 डिवाइड बाई 1000 यानी कि 2.4 का प्राइस अर्निंग निकल जाएगा. यहाँ पर 49 का इसका मतलब कि द प्राइस ऑफ द स्टॉक इज 49 टाइम्स द एनुअल ईपीएस बेसिकली जो होता है. बुक वैल्यू बेसिकली, बुक वैल्यू जो होती है वो होती है अकाउंट्स में वैल्यू क्या. बेसिकली अगर इस कंपनी को अगर हम बेचने जाए मार्केट में तो उसकी क्या वैल्यू निकलेगी, बुक वैल्यू होती है बेसिकली एसेट्स माइनस लायबिलिटी. अब सारी कंपनी के एसेट्स लो, सब्ट्रैक्ट कर दो, उसमें जितनी भी लायबिलिटीज हैं वो बेसिकली हमारी बुक वैल्यू होती है. बेसिक अगला जो चीज तुम्हें दिख रहा होगा यहाँ पर, दैट इज डिविडेंड यील्ड. डिविडेंड यील्ड बेसिकली हमको बताता है कि डिविडेंड डिवाइडेड बाई द स्टॉक प्राइस. तो अगर एक स्टॉक जैसे फॉर एग्जांपल एशियन पेंट्स तुम होल्ड करते हो और तुम्हें उसके लिए 30 रुपये डिविडेंड मिला है, तो हम डिविडेंड यील्ड कैसे कैलकुलेट करेंगे कि 30 रुपये डिवाइडेड बाई 2400 का जो शेयर है, तो हमारा आ गया डिविडेंड यील्ड 1.38% का कुछ. ठीक है. फिर ईपीएस, ईपीएस का मतलब अर्निंग पर शेयर. तो ईपीएस ग्रोथ तुम्हें दिख रही होगी, प्रॉफिट वेरिएशन तुम्हें दिख रहा होगा, प्राइस टू बुक दिख रहा होगा. तो अगर हम स्टॉक के प्राइस को हम बुक वैल्यू से डिवाइड कर दें, यानी कि प्राइस चल रहा है 2400, 188 से डिवाइड किया 12.8 प्राइस टू बुक मिली. इसका मतलब कि स्टॉक 12.8 टाइम्स एक्सपेंसिव है उसकी बुक वैल्यू से, जो वैल्यू जो अगर उसको कंपनी को बेचने निकल जाए उस पर मिलेगी. ठीक है. सो इंडियन कंपनी बहुत महंगी हैं क्योंकि उनकी प्राइस टू बुक बहुत ज़्यादा होती है. उसका रीज़न हम बाद में डिस्कस कर सकते हैं कभी. फिर ये ईपीएस वगैरह हो गया, ये फ्री कैश फ्लो हो गया, थोड़ी ज़्यादा एक्सपेंस, थोड़ी बड़ी चीज़ हो गई. ईवी ईवी टू एबिटा मतलब होता है एंटरप्राइज वैल्यू डिवाइड बाय एबिटा. चलो इसको भी छोड़ दो. पेग रेशियो होता है प्राइस अर्निंग डिवाइड बाय ग्रोथ. तो बेसिकली हम जो पी रेशियो जो होता है जैसे 49 टाइम्स का पी रेशियो, तो हम देखने के लिए पी रेशियो सही है कि नहीं, तो हम उसको ग्रोथ से डिवाइड कर देते हैं। अगर इसमें अर्निंग्स ग्रोथ फॉर एग्जांपल 25% की है, तो हमने 49 को, सॉरी 20 की है, 49 को 20 से डिवाइड करिए, 2.4 हमको मिल गया, पैक रेशियो हमारा मिल गया। तो ये रेशियो एनालिसिस होती है, यहाँ पर हम देखते हैं। बहुत इंपॉर्टेंट चीज होती है रेशियो एनालिसिस में ये दो टर्म्स, रिटर्न ऑन इक्विटी, रिटर्न ऑन कैपिटल। आरओसी का मतलब होता है रोकी, रिटर्न ऑन कैपिटल एम्प्लॉयड, और रिटर्न ऑन इक्विटी होता है तो बेसिकली रिटर्न ऑन इक्विटी और कैपिटल का फॉर्मूला वगैरह दिखा देता हूँ आपको। जैसे ईपीएस का मतलब है बेसिकली नेट प्रॉफिट डिवाइडेड बाय नंबर ऑफ शेयर्स। प्राइस अर्निंग का मतलब हो गया प्राइस ऑफ द शेयर डिवाइड बाय अर्निंग, ईपीएस अर्निंग पर शेयर। डिविडेंड यील्ड यानी कि एनुअल डिविडेंड बाय प्राइस ऑफ शेयर। डिविडेंड पे आउट होता है। बुक वैल्यू मतलब होता है नेट वर्थ बाय टोटल नंबर ऑफ शेयर, प्राइस टू बुक के लिए मार्केट प्राइस डिवाइड बाय बुक वैल्यू। अच्छा हो गया क्या? हाँ, सो हाँ, रिटर्न ऑन इक्विटी का एक सेकंड फॉर्मूला जो होता है बेसिकली होता है उसमें नेट प्रॉफिट को हम डिवाइड कर देते हैं इक्विटी से, रिटर्न ऑन इक्विटी निकालने के लिए। सो रिटर्न ऑन इक्विटी बेसिकली कंपनी की एफिशिएंसी बताती है कि अगर इक्विटी जैसे कि कंपनी की है 100 रुपये, तो अगर उस पर 30 रुपये का साल में प्रॉफिट बना लेती है कंपनी, तो उसकी रिटर्न ऑन इक्विटी 30% हो जाएगी। और रिटर्न ऑन कैपिटल का मतलब होता है कि साल में, जैसे कि फॉर एग्जाम्पल एशियन पेंट्स ने फॉर एग्जाम्पल साल में जैसे कि 10,000 करोड़ कैपिटल डिप्लॉय करी, उस पर उसने प्रॉफिट बना लिया 3,700 करोड़ का साल में। तो रिटर्न ऑन कैपिटल एम्प्लॉयड हम ऐसे निकालते हैं कि हमने 3,700 करोड़ को डिवाइड करी 10,000 करोड़ से, तो हमें 37% का रिटर्न ऑन कैपिटल एम्प्लॉयड मिल गया। अब बेसिकली हम ये करते क्यों हैं, ये नंबर्स निकालते क्यों, रिटर्न ऑन इक्विटी, रिटर्न ऑन कैपिटल? बेसिकली जो बेसिक लॉजिक है उसका एक स्टोरी समझते हैं, बेसिकली कहानी। तो फॉर एग्जांपल आप एक बिजनेस एनालिस्ट हो, अज्यूम करो, ठीक है, और मैं आपको बोलता हूँ कि चलो ऐसा करते हैं कि आपको दो कंपनीज देता हूँ, ठीक है। एक कंपनी है जो कि साल में आपको 10 करोड़ का प्रॉफिट करके देती है, ठीक है। और बेसिकली इसका जो इक्विटी है वो है 100 करोड़ का। दूसरी जो कंपनी है वो साल में करती है पूरे 1,000 करोड़ प्रॉफिट, है ना, लेकिन और उसका जो जो इक्विटी है वो है 1 लाख करोड़ का। तो अब आपको कंपेयर करना कौन सी बेटर कंपनी है एज बिजनेस एनालिस्ट, तो आप कैसे करोगे? आप सोचोगे यार देखो, नेट प्रॉफिट ज़्यादा तो है दूसरी कंपनी में, लेकिन अगर आप इसका रेशियो वाइज देखो, अगर दिमाग लगाओ, तो यार ये प्रॉफिट कर रही है इतने, क्या कहते हैं, ज़्यादा इक्विटी के ऊपर। क्या कहते हैं 1,000 डिवाइड बाई 1 लाख करोड़, यानी कि 100 रुपये इक्विटी पर 1 रुपये का प्रॉफिट कर पा रही है। वहां पर दूसरी कंपनी जो है 10 रुपये की इक्विटी पे 1 रुपये का प्रॉफिट कर पा रही है। तो ये जब दिमाग लगाओगे आपकी, अच्छा, आपको उसके साइज के बेस पे कंपेयर करोगे ना दो कंपनीज को, क्योंकि एक कंपनी छोटी है, कंपनी बड़ी, कैसे कंपेयर करोगे? तो सेम स्टैंडिंग पर लाने के लिए, कंपनी को कंपेयर करने के लिए हम ये मैट्रिक्स यूज करते हैं रेशियो एनालिसिस के, रिटर्न ऑन इक्विटी, रिटर्न ऑन कैपिटल, कि कंपनी की क्वालिटी कितनी अच्छी है। जितनी भी अच्छी कंपनीज होती हैं, बेसिकली जो हाई क्वालिटीज कंपनीज, उनकी रिटर्न ऑन इक्विटी, रिटर्न ऑन कैपिटल बहुत ज़्यादा होती है। बेसिकली वो कम कैपिटल पर ज़्यादा प्रॉफिट बना पाती है, कम इक्विटी पर ज़्यादा प्रॉफिट बना पाती है। फॉर एग्जाम्पल एशियन पेंट्स इज अ हाई क्वालिटी कंपनी, बाय बिकॉज यू कैन सी द रिटर्न ऑन कैपिटल इज 37%। इसका मतलब अगर एशियन पेंट्स 100 रुपये का कैपिटल डिप्लॉय करती है अपने ऑपरेशन में ईयर, तो 37 रुपीज़ का बेसिकली वो प्रॉफिट कमा लेती है। रिटर्न ऑन कैपिटल का अगर आपको रिटर्न आरओसी का अगर आपको फॉर्मूला चाहिए, तो बेसिकली वो होता है बेसिकली ईबिट डिवाइड बाई कैपिटल, टोटल कैपिटल एम्प्लॉयड। ईबिट होता है अर्निंग्स बिफोर इनकम एंड इंटरेस्ट एंड टैक्सेस। तो अलग अलग अकाउंटिंग टर्म्स होते हैं, जैसे कि पहले रेवेन्यू होता है, रेवेन्यू को सेल्स भी बोलते हैं। सेल्स के बाद हम कॉस्ट ऑफ गुड सोल्ड निकाल देते हैं, हमको नेट, सॉरी, वो आपका ग्रॉस मार्जिन मिलता है या ग्रॉस प्रॉफिट मिलता है। ग्रॉस प्रॉफिट में से हम चीज़ें निकालते हैं, तो फिर हमको और चीज़ें मिलती हैं। फिर हमको एबिटा मिलता है, एबिटा के बाद हमको ईबिट मिलता है, फिर हमको फाइनली जाके हमको नेट प्रॉफिट मिलता है कि सब कुछ टैक्स वैक्स काट लिया, सारा इंटरेस्ट हटा दिया, सारे कॉस्ट हटा दिए, तब जाके कितना प्रॉफिट हुआ। सो ये सब होता है। सो आई थिंक हमने कंप्लीट पूरा कर लिया है, फंडामेंटल एनालिसिस, टेक्निकल एनालिसिस, सारी चीज़ें। सो आई थिंक इट्स ओवर। किसी को कोई क्वेश्चन हो तो पूछ सकते हो, किसी भी चीज़ के बारे में इन जनरल। एनीबडी हैज एनी क्वेश्चन?
हेलो भैया।
हाँ भाई बताओ।
Bull makes money by buying.
बोलो भाई। आवाज़, अब एक सेकंड यार, ये क्या हो गया? अबे यार
Hello.
लाइट, सॉरी भाई, लाइट चली गई थोड़ी। हाँ बोलो भाई, बोलो।
A bull makes money by buying stocks at lower price and sells it when the stock price is going up, right?
हम्म।
And how does a bear makes money?
बियर बेसिकली वो शॉर्ट सेल कर देगा ना, वो ऊपर पर बेच देगा, नीचे पर खरीद लेगा। शॉर्ट सेलिंग का ये मतलब होता है ना
Oh,
कि हम पहले सेल कर देते हैं, बाद में बाई करते हैं। तो अगर जैसे कि मैं बियरिश हूँ किसी स्टॉक पर, फॉर एग्जांपल मैं एशियन पेंट्स पर बियरिश ही हूँ, और मेरे पास एक चीज़ है कि या तो मैं
हाँ
इंट्राडे में जाके शॉर्ट कर दूँ, इंडिया में क्योंकि हम वैसे कर नहीं सकते क्रैश सेगमेंट में, तो इंट्राडे में शॉर्ट कर सकता हूँ। दूसरा मेरे पास ऑप्शन है कि मैं उसके जाके फ्यूचर्स को जाके शॉर्ट कर दूंगा। तो डेरिवेटिव सेगमेंट होता है, उसमें फ्यूचर होते हैं, ऑप्शंस होते हैं, फॉरवर्ड्स होते हैं, स्वैप्स होते हैं, उसमें एक डेरिवेटिव में एक सेगमेंट होता है फ्यूचर्स, उसमें जाकर मैं शॉर्ट बेसिकली सेल कर दूंगा फ्यूचर ऑफ बेसिकली एशियन पेंट्स का, अगर मैं बियरिश व्यू रखता हूँ एशियन पेंट्स के ऊपर।
बाई करने के बिना कैसे सेल कर सकते
हाँ, तो
हैं?
उसी को शॉर्ट सेल बोलते हैं ना, वही तो बता रहा हूँ। शॉर्ट सेल में बेसिकली हम बिना खरीदे पहले बेच देते हैं, बाद में खरीद लेंगे, ऐसा होता है। वो हम बोल देते हैं कि चलो अभी तुम मेरे ऐसे बोलो, जैसे फॉर एग्जांपल तुम्हारा ब्रोकर है ना, जैसे कि फॉर एग्जांपल तुम्हारा कोई ब्रोकर अज्यूम कर लो, एचडीएफसी तुम्हारा ब्रोकर है, ठीक है। तुमने बोला एचडीएफसी से, यार ये देखो ऐसा करो यार, मेरा जो व्यू है एशियन पेंट्स पर नेगेटिव है, ऐसा करो तुम, ऐसा करो कि मेरी तरफ से सेल कर दो 1000 शेयर एशियन पेंट्स, ठीक है। अब
हम्म
ब्रोकर के पास बहुत सारे शेयर होते हैं, तो उसने उसके पास जो बहुत सारे शेयर थे उनमें से कुछ शेयर सेल कर दिए। फिर तुम बाद में, क्योंकि तुमने सेल कर दिया, तुम अभी तक खरीदा नहीं है, तो तुम्हें खरीद के देना पड़ेगा उसको। स्क्वायर ऑफ कहते हैं, ट्रांजेक्शन को खत्म करना बोलते हैं बेसिकली। तो स्क्वायर ऑफ करने के लिए फिर
हम्म
तुम क्या करोगे बाद में, उसको विद इन स्पेसिफाइड टाइम उसको तुम खरीद के दे दोगे स्टॉक। तो फॉर एग्जाम्पल अगर स्टॉक प्राइस आज 2500 रुपये एशियन पेंट्स का, एक हफ्ते बाद 2000 हो गया, अगर तुम शॉर्ट सेल कर रहे हो तो ब्रोकर ने तुम्हें 2500 में तुम्हारे नाम पे बेच दिया, बाद में तुम उसको 2000 में
हम्म
खरीद के उसको दे दो। स्क्वायर ऑफ कर दो ट्रांजेक्शन को, तो बेसिकली 2500 माइनस 2000 तुम्हारा प्रॉफिट हो गया 500 रुपये।
ओके ठीक है sir।
और कोई डाउट किसी चीज तरीके का, किसी को भी?
हेलो।
हाँ बोलो भाई।
हेलो, मेरे को एक डाउट
हाँ,
था। रिलेटिव स्ट्रेंथ इंडेक्स जब आपने बताया था तो आपने बोला जब 70 प्लस है तो ओवर बॉट होता है और 30 लो है तो ओवर
ओवरसोल्ड
सोल्ड
होता
होता है, वो
है।
कैसे? हम्म,
आरएसआई बेसिकली एक मोमेंटम इंडिकेटर है, रिलेटिव स्ट्रेंथ इंडेक्स सबसे कॉमन मोमेंटम इंडिकेटर है। तो बेसिकली हमको बताता है कि स्टॉक का मोमेंटम कितना चल रहा है। मोमेंटम का बेसिक मतलब है कि कितना स्टॉक बेसिकली फ्लेवर में, काइंड ऑफ लेमन लैंग्वेज में समझो तो अगर 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 जीरो है तो बिल्कुल खराब है, मतलब अगर बहुत कम है मोमेंटम, 0 to 10 20 है तो बहुत कम मोमेंटम है, 90 100 है तो बहुत ज़्यादा ही मोमेंटम हो रखा है। तो बेसिकली थ्योरी ये है कि 30 से कम है तो इसका मतलब बहुत ज़्यादा कम मोमेंटम है, इसका मतलब ओवर सोल्ड हो रखा है, लोगों ने बेच बेच के स्टॉक पेल दिया है, स्टॉक गिरा पड़ा है। तो हो सकता है यहाँ पर रिवर्सल आने का कुछ चांसेस बन जाए। सो बेसिकली वो होता है। 70 से ऊपर इसका मतलब है कि लोगों ने ज़्यादा ही कुछ खरीद खरीद के ज़्यादा ही चढ़ा दिया स्टॉक को, अलग ही चने की झाड़ पर चढ़ा दिया स्टॉक। और मतलब भाई तो इसीलिए तो हो सकता है ट्रेंड रिवर्सल हो जाए तो स्टॉक शायद गिरना स्टार्ट हो जाए। सो 70 से ऊपर मतलब मोमेंटम बहुत ज़्यादा है, तो इसलिए ओवर बॉट रीजन में ज़्यादा इस लोगों ने खरीद लिया है, तो शायद मोमेंटम चेंज हो जाए। और बेसिकली इसको बेसिकली जो कॉन्सेप्ट होता है इसमें बेसिकली दैट इज रिग्रेशन टू मीन, कि बेसिकली जो स्टॉक प्राइस हैं वो अपने मीन वैल्यू की तरफ रिवर्ट करते हैं। तो अगर कोई एक एक्सट्रीमिटी आती है तो वापस वो फिर जैसे एक साइकिल ऐसे गई तो ऊपर वापस ही नीचे भी आएगा। तो ये बेसिकली हमारी कहानी होती है कि इतना बढ़ गया, कितना ही बढ़ेगा, मतलब ओवर बॉट हो चुका है, 70 से भी ज़्यादा मोमेंटम पहुंच चुका है, आरएसआई पहुंच चुका है। तो अब शायद सेलिंग इसमें शुरू हो जाए, शायद इतना ज़्यादा कौन ही खरीद पाएगा इससे ज़्यादा।
I had one more question. We saw a bullish to bearish head and shoulder pattern.
हम्म।
So, like, how does the bearish to bullish pattern look as
उसका
compared
एग्जैक्ट
to the
अपोजिट है
bullish to
उसका,
bearish?
जैसे वो बना हुआ है उसका एग्जैक्ट
Opposite है?
मिरर इमेज ले लो, मिरर इमेज बिल्कुल अपोजिट उसका जैसा बनेगा वो हो जाएगा। तुम बोल रहे हो हमने जो देखा था वो
Okay.
बुलिश टू बेरिश का दिखाता था, हेड एंड शोल्डर, मतलब इस तरीके का कुछ है ना।
हम्म,
तो बियरिश
हम्म,
ये हो गया बियरिश हेड एंड शोल्डर, है ना, इस तरीके का।
हम्म,
तो हम बुलिश मार्केट से हम एक बियरिश मार्केट में आ गए, है ना। इसका अपोजिट कैसा होगा कि हम
हाँ।
एक बियरिश मार्केट में थे, फिर हेड एंड शोल्डर कुछ तो बना, फिर हम वापस बुलिश मार्केट में चले गए, यहाँ से ट्रेंड रिवर्स हो गया बुलिश की तरफ, तो हम बोलेंगे इसको बुलिश हेड एंड शोल्डर पैटर्न। इसको ये भी बोलते हैं बुलिश हेड एंड शोल्डर को हम इन्वर्टेड हेड एंड शोल्डर भी बोलते हैं बेसिकली। और जो बियरिश हेड एंड शोल्डर है, जो ओरिजिनल हेड एंड शोल्डर है, उसको नॉर्मल हेड एंड शोल्डर बोलते हैं, इस वाले को हम इन्वर्टेड हेड एंड शोल्डर बोलते हैं।
Okay. And one more question. When we were discussing about moving averages,
हम्म।
so you took one specific example of 9 DMA.
अब
So,
वो ट्रेडिंग में अवेलेबल था इसलिए 9 डीएमए। हाँ, 9 डीएमए का मतलब
so
है
like,
अगर, हाँ
is it true for like any DMA, 20 DMA or?
हाँ, 9 डीएमए का मतलब हुआ कि अगर मैं डे 10 को डीएमए अगर मेरे को कैलकुलेट करना है तो मैं बेसिकली डे 1 से लेकर डे 9 तक का मैं एक मूविंग एवरेज ले लूंगा। बेसिकली डे 1 से लेकर डे 9 तक का एक एवरेज ले लूंगा जो भी प्राइजेस होंगे। तो 1 + 2 + 3 से लेकर 9 तक ऐड करूंगा और जो भी है इसको 9 से डिवाइड कर दूंगा, तो ये मेरा मूविंग एवरेज निकल गया। और
सो
एक्सपोनेंशियल वाले
लाइक
में ये हो गया सिंपल मूविंग एवरेज। एक्सपोनेंशियल वाले में हम वेट्स असाइन कर देंगे अलग अलग कि किस डे को कितना वेट देना है, तो जितना ज़्यादा रिसेंट होगा उसको वेट ज़्यादा मिल जाएगा एक्सपोनेंशियली एज कम्पेयर टू प्रीवियस वाले को। तो उसमें हम रिसेंट मूव को ज़्यादा वो देते हैं, मतलब वेटेज देते हैं।
ओके, थैंक यू।
और किसी को कोई सवाल कुछ भी?
How do you analyze like the management is good
अब वो
of any
बहुत बड़ा
company?
सवाल, वो बहुत ही बड़ा टॉपिक है। तो जैसे मेरे को मैनेजमेंट को डिसाइड करना है, तो पहले मैं देखूंगा कि बेसिकली ये मैनेजमेंट की ऑनेस्टी में कैसे देखूँ। तो ऑनेस्टी देखने के लिए एक होता है कि इसके बेसिकली मैं फॉरेंसिक्स करूँ। सो दिस अ होल फील्ड कॉल्ड एज फॉरेंसिक अकाउंटिंग, जहाँ पर हम देखते हैं कि जो कंपनी जो स्टेटमेंट्स दिखा रही है, जैसे कि फॉर एग्जांपल, एक सेकंड,
Say yes bank.
हाँ रुक जा मैं दिखाता हूँ, एक सेकंड। जैसे कि हम स्कैनर पर गए तो हमको दिख जाएंगे सारे, ये रिजल्ट्स आ गए। ये हमारा पी एंड एल या फिर इनकम स्टेटमेंट है ना। इसके अलावा ये बैलेंस शीट है, ये हमारे कैश फ्लोज हैं। तो बहुत सारी टेक्निक्स होती हैं, कई सारी टेक्निक्स होती हैं जहाँ पे देखते हैं इन्वेंट्री डे, देख लेते हैं कि इन्वेंट्री डे बहुत ज़्यादा तो नहीं है। कई बार हम देखते हैं कैश फ्लो, अगर हम बेसिकली प्रॉफिट को सीएफओ से डिवाइड करते हैं, कैश फ्लो फ्रॉम ऑपरेशन से, अगर मुझे दिख रहा है कि कैश फ्लो फ्रॉम ऑपरेशन बहुत ज़्यादा कम है और प्रॉफिट कुछ ज़्यादा ही है, इसका मतलब क्या हो सकता है कि कंपनी कंपनी प्रॉफिट तो बहुत ज़्यादा दिखा रही है लेकिन वो कहीं ना कहीं कैश फ्लो में कन्वर्ट नहीं हो पा रहा है। इसका मतलब कैश आ नहीं रहा है, तो इसका मतलब क्या है, कुछ झोल झपाटा कर रहा है, इसका मतलब प्रमोटर। तो इस तरीके के, ये एग्जाम्पल हुआ। इस तरीके थाउजेंड्स ऑफ चीज़ें होती हैं, फैक्टर्स होते हैं जो देखते हैं बेसिकली फॉरेंसिक अकाउंटिंग में। उसके लिए अच्छी बुक है बेसिकली, डायमंड्स इन द डस्ट, उसको पढ़ सकते हो। उसमें उसमें थोड़ा बेसिक चेकलिस्ट दे रखी है, एक 10 पॉइंटर, जहाँ आप अलग अलग 10 फैक्टर्स देख सकते हो फॉरेंसिक अकाउंटिंग करने के लिए। तो उससे पता चल जाता है कि मैनेजमेंट चोर तो नहीं है। फिर और भी होता है कि तुम मैनेजमेंट का पर्सनल वो देखोगे, बिहेवियर कैसा है। इसके अलावा तुम बहुत सारी 10-20 साल की उसकी वो पढ़ोगे, एनुअल रिपोर्ट्स पढ़ोगे और उनके इन्वेस्टर प्रेजेंटेशन देखोगे। उसमें देखोगे कि बेसिकली मैनेजमेंट क्या कमेंट्री कर रही है, कि मैं बोल रही है कि क्या कंजर्वेटिव मैनेजमेंट है, कि वो बोल रही है कि मैं 20% का ग्रोथ अगले साल लेकर आऊंगी लेकिन ला रही 10% का। मतलब ये हो गई जो ओवर हाइप कर रही है, फालतू में उल्टा सीधा कुछ भी बोल रही थी। कुछ होती हैं जो 25% का ग्रोथ कर देती है, बोलती है पहले लास्ट ईयर बोल रही थी कि मैं 20% का ग्रोथ करूंगी। बेसिकली मैनेजमेंट गाइडेंस देता है फ्यूचर के बारे में कि हम इतना ग्रोथ करेंगे, हम इतनी अर्निंग्स करेंगे, हम इतना ये सब करेंगे। सो वो बोल रही है कि मैं 20% का ग्रोथ करूंगा लेकिन एक्चुअल में 25% का ग्रोथ आ गया। सो यहाँ पे दिखता है कि ये बहुत कंजर्वेटिव मैनेजमेंट है, बहुत अच्छा मैनेजमेंट है। तो इस तरीके से मैनेजमेंट को एनालाइज करते हैं। फिर हम देखते हैं कि बेसिकली जो बोर्ड ऑफ मैनेजमेंट में बैठे कौन लोग हैं, कि सीईओ है कौन, सीएफओ है कौन। कहीं ऐसा तो नहीं कि जो जो कंपनी का मालिक है उसने अपने अपने क्या किसी परिवार वाले को बिठा रखा है पूरे सीईओ सीएफओ पर, बोर्ड पर पूरा उन्हीं को बिठा रखा है। तो इसका मतलब समझ में आता है कि ये सब प्रमोटर के पॉन्स हैं ये सब। तो बेसिकली कॉर्पोरेट में बेसिकली होता क्या है कि देयर इज वन कॉन्सेप्ट कॉल्ड डिस्टिंक्शन बिटवीन द प्रमोटर्स एंड द मैनेजमेंट। मैनेजमेंट बेसिकली कंपनी को चलाती है और कंपनी को ओन करते हैं प्रमोटर्स। तो या फिर इन्वेस्टर्स। तो जैसे कि तुम अगर शेयर खरीदते हो तो मैं इन्वेस्टर कैटेगरी में, तो तुम कंपनी को ओन करते हो बट तुम कंपनी चलाते नहीं हो, चलाती मैनेजमेंट है। तो क्या होता है, कई बार क्या होता है कि कंपनीज का कुछ मतलब कुछ कंपनीज में क्या होता है कि मैनेजमेंट और प्रमोटर मतलब के बीच में कुछ झोल झपाटा हो जाता है कि मैनेजमेंट प्रमोटर बोलता है कि ये कुछ उल्टा सीधा कुछ भी दिखा दो, एंट्रीज वगैरह ज़्यादा प्रॉफिट दिखा दो हमारे फायदे के लिए। तो तो उस तरह से इसे देखना पड़ता है कि बोर्ड पे लोग बैठा कौन है। अगर तुम्हें दिख रहा है कि कोई ऐसा व्यक्ति जो पहले कोई बड़ा कोई कांड कर चुका है कॉर्पोरेट स्कैंडल टाइप का और वही बोर्ड में बैठा हुआ है, तो फिर वो भी एक तरीका होता है। ऐसे बहुत तरीके होते हैं मैनेजमेंट देखने के लिए। और कोई सवाल? ओके ठीक है, तो हम एंड करते हैं। ठीक है, सो ओके बाय।